Welcome back. Analysts boost the Walt Disney Company's stock price target to $200. This is based on theme park projections that shows recovery, even only a little.
Guggenheim securities analyst Michael Morris raised his stock price target on the Walt Disney Company by $15 to $200. He boosted his theme parks unit financial forecast better trajectory in 2021. Walt Disney World Attendance Tracker indicates that overall improved demand in fiscal quarter 2021 compared to the fourth quarter of 2020, consistent with the expanded capacity availability during the quarter. But still, Walt Disney Company doesn't rely much on a theme park income stream. Over the next 2 years, Disney sets guest safety to be a primary segment objective and anticipate meaningful investment in related protocols and health measures. Therefore, Walt Disney Company reflects a slower revenue recovery than current consensus estimates in the fiscal year 2021 to 2023. From all sources, IDX Channel.
Yes, 2020 is one of the worst years imaginable for the theme park operator, including Disney. In fiscal year 2019, the company's theme parks and resorts business accounted for roughly 37% of total revenue. Fundamentally, this isn't a great look for Disney's financial performance during pandemic. Well, you know, people don't go to the theme park these days. Even so, Disney can prove how much a good team can accomplish even under dramatic pressures that seem to threaten the economic essence of their company. Theme park didn't go well. The team allocate their focus to maximize its revenue and other income streams. Let's see Disney operating segment proportion in the next graphic. In media networks, they're located $28.39 billion. Oh, it's revenue actually. And the parks and products, $16.5 billion revenue. And studio entertainment, $9.64 billion, and direct to customer and international, $16.97 billion. We gather the data from Statista. In the year of 2020, the Walt Disney Company generated a total revenue $16.5 billion with its parks and resort segment. This was actually a decrease around $10 billion from the year before. But then here comes the hero. The company's biggest segment in 2020 was its media networks. Thanks to people with binge-watching behavior during this pandemic, this generated revenue of $28.39 billion in 2020 for Disney. Dear Potato Couch, including me, we are such a hero for Walt Disney Company. This marks a significant increase from $16.21 billion of revenue generated in this segment in 2009. As a whole, the total assets of the Walt Disney Company amounted to $201.55 billion in 2020. Seeing such huge assets from its media, investors are no longer obsessed over the fact that only brave souls would visit theme parks during a viral pandemic. Now they are captivated by the potential value of Disney's content catalogs and creative muscle. And the basic indicator is that Disney is still on worldwide box office 2020 studio rankings. Let's see the detail in the next graphic. We have 1, 2, 3, 4, 5, 6, the biggest 6 worldwide box office 2020 studio rankings. The first one, we have 21st Century Fox with a total gross of $1.26 billion. And after that, we have Sony Pictures, $1.1 billion. Warner Bros., $1.08 billion. And Universal, we have $1.03 billion. Paramount Pictures, $0.4 billion. And Lionsgate, $0.19 billion. And thanks to Disney's blockbuster movies, media segment generated 111% of Disney's overall operating income. And also, thanks to technology, even mostly cinemas were shut down during pandemic with the streaming offer provided by Disney. A new standard of entertainment has been set. People can enjoy Disney movies from its new blockbuster app, so-called Disney Plus. Indeed, Disney has invested heavily into its direct-to-consumer business as the COVID-19 pandemic continues to keep millions of people at home and in need of entertainment. Through the next graphic, we can see a quick rundown of Disney Plus's rapid growth. First quarter in 2020, $26.5 billion as its growth. And the second quarter grew to the level of $33.5 million. Third quarter, $57.5 million, or million subscribers, I mean. Okay, all of them are subscribers. And fourth quarter, it has 73.7 subscriber. 73.7 million subscribers. And CEO Bob Chapek said that Disney's Investor Day Thursday that of the roughly 100 projects that were announced, about 80% will go directly to Disney Plus. Throwback a little bit, 10 million people signed up within the first day with a total of 26.5 million subscribers in its first operating quarter. See such good growth, management said it expects that overall subscriber figure to reach a whopping 325 million at the midpoint by the end of its fiscal 2024. And what's more, it expects the segment to be profitable by that point as well. It shows the rapid growth of Disney Plus and that Disney is emerging as one of the early winners of the streaming wars. Of course, this brings good sign to investor. Disney Plus launched 13 months ago, but the streaming platform quickly took off. And how about the stock price after Disney launched the app? Let's see the next graphic. As you can see, the growth or the dynamic of Walt Disney stock price keeps on increasing, or at least they're moving in the positive level. Recorded by January 14, it was on the level of $173 per share. And following the devastation of the novel coronavirus, one would expect Disney to perform that well. Despite the impressive run of Disney's stock price, the company is a good choice for a long-term oriented investor. Moreover, given Disney's expanding DTC platforms at a rapid pace, the company's diversification, international exposure, and brand recognition. And yes, viewers, truly Disney is a buy on any dip in the stock price, recalling the words of Warren Buffett that said, all there is to investing is picking good stocks at good times and staying with them as long as they remain good companies. That's all for today's infographic session. Don't go anywhere because we'll be right back after the break.